Something very interesting is going on right now in the financial system. We are at a crossroads, and I'm going to show you some disparity in the information that you must pay attention to. We have retirement accounts that are at stake. We have people's savings that are being gambled with. And of course, this all unravels very rapidly. Let me show you. You came here for the truth, so let me unveil that for you. In today's video, we are going to start with this, the IMF. Now, obviously, the IMF, for anyone who has read Economic Hitman, Confessions of an Economic Hitman, you would know about the IMF, certainly. But what they do, what they talk about with their reports and things, I actually find that I tend to agree with it. Solutions, on the other hand, different story. IMF has a gloomy outlook for the world economy. Without a course correction, we are indeed headed for the tepid 20s, and basically just saying, look, you did so much, you squeezed out all the growth, and now we are not expecting that growth to come out. Why? Because you can't print your way to growth. In fact, you rob the future. When you print that money, you basically take the future and bring it into the present. And you keep doing that over and over and over again, you cannot expect real growth. You can have paper growth, but not real growth. And that, of course, is where we need to begin. Even the World Economic Forum is saying we haven't seen this kind of debt since the Napoleonic Wars. I mean, crazy, right? He said the governments needed to consider how to reduce the debt and take the right fiscal measures without getting into a situation where it kicks off a recession. He also mentioned persistent inflationary pressures and that generative artificial intelligence could be an opportunity. Hey, so, okay, what did Ben, Helicopter Ben, you remember him? Okay, fantastic guy. What did he say? Well, basically, that you don't need to worry about debt. What you need to worry about is growth. And I'm pretty sure Janet Yellen said this as well. What they want to achieve is more growth. Because if you can just grow, well, then the debt is somehow manageable. They're never going to get out of debt. That's a simple matter of fact. The vast majority of the people watching this video know what money is today. Money is simply now a debt instrument. We're being told that everything is safe and secure. Don't worry about it. But when you want to get money, it is created out of thin air at your banks. Not to mention the way that the central banks work, how they are able to basically do whatever they want at any time. So there's no getting out of debt. And so always the proposed solution is that don't worry about it. We just need to grow more. And so they throw these ideas out there in order to get this growth going. We need this, we need that. Well, that's fine in a sense, but let's be honest. You can't just have the new flashy thing of the day, the shiny object for everybody to chase, because eventually that runs out. You need something real, tangible. You need something that can actually carry you into the next decade, not just ideas. We need something real. Private equity's latest trade, the financial futures of millions of retirees. This is showing us that insurers' holdings of riskier assets after they get acquired by a private equity firm compared to traditional insurers. I just find it interesting the way that things happen and unfold, that as time goes on, more risk is being taken. There was once a time in which we saw, bonds being considered a safe haven and equities were riskier. So you want to own a lot of bonds in your portfolio. And now over time, bonds are basically going away and stocks are taking over more. But now we have all kinds of financial instruments, derivatives. There's derivatives on the weather. Okay, this is not like an unusual thing. Like there's derivatives based on the weather. In addition to all the weather modification, kind of interesting correlation there. But anyway, I didn't say that. A brisk new trade in the financial futures of millions of retirees is unnerving some U.S. workers, regulators, and politicians who worry that private equity firms will invest corporate pensions recklessly. Oh, Would they ever do that? Oh my goodness. They didn't do that. Oh no, 2007, 2008. They were so, they cared so much. They weren't careless at all. Recent lawsuits talking about this, casting a broader spotlight on private equity's push into new corners of finance. This is what we have to deal with. You got to understand that there will be the case in which your services are slashed and your cost of everything goes up. That's where we are today. If you want to know, like, freeze time and then, sort of, let's take a trip into the future. We're going to look back at this moment here. What are we going to see? This is the time in which we lost a lot of the things we were used to, and then the cost kept rising. You can call it, a bit of stagflation, a bit of George Orwell, whatever, a little bit of everything. Not a good take. FSB calls on hedge funds and commodities traders to hold more liquid assets. So you're getting that, okay? Global policymakers' recommendations focus on the need for capacity to meet margin calls in case of market shocks, right? Stock market, you better hold stuff that's liquid. You better hold stuff that you can sell on right away. Instead, what was happening during, a little while ago when they started to increase interest rates, what we saw with Silicon Valley Bank and what we saw with others was that, they had taken a bunch of, I don't want to say risks, but it was mortgage-backed securities, so I would call that risky. But essentially, they were buying up stuff that they needed to in order to get a return. And what happened here was that interest rates rose. They weren't expecting it. Then they dealt with these problems. They need some liquidity there. They need some liquidity, right? But what do the rich people do? What do the very rich people do? Are they doing that? No. I brought this up. Oh, you'll see this right here. New York's rich get creative to flee state taxes. Auditors are onto them. So people are trying to get around it. They're like, let me, fly down to Florida for a little while. I'll try to get over there. I'll get the flight. They talk about basically the flight that's 15 minutes after midnight because they want to be able to, make sure that they stay ahead of this. Puerto Rico, same thing, right? But they're cracking down on all of it, and they're making sure that people don't take advantage of this system. They want to make sure people are not just paying their taxes, but that they're squashed. That's what it's all about when you look at it a little bit more carefully. Now, I'm going to show you. At the end of this video, I'm going to show you where the rich are putting their money. I ask you something. Where's the beef, right? Where's the beef? But I want to show you where's the action. Where's the growth in this case? Is it all negative? Well, no. Factories around the world are slowly cranking into gear again. US and China lead nascent activity recovery, and Germany improves. Wisconsin producer has really good pipeline in the work for 2024. So you don't get too much, US growth in that respect, but a lot of companies, like if you're producing supplements, for instance, you're not making that in China. You're making that in the United States. If you're producing skincare products, you might very well be producing that in the United States. So that's where we could see the growth, certainly. Semiconductors are getting a boost, but trying to compare that to Taiwan, it's not even close. But that's that. That's a good thing. Digital ad market is finally on the mend, bouncing back from the dark days of 2022. Meta, Alphabet, and Snap all reported first quarter results this week that bet estimates showing an acceleration in advertising growth. People don't want to advertise if they think the recession is here, the recession is coming, and people are not going to spend. So ads are actually a good indication of the sentiment being felt from the business side, but they're looking at the consumer, right? They want to advertise to people who want to buy their stuff. So that's a good sign. That's great. Good stuff. And you could see the corporations. There's a few things I want to note with this. Number one, just the fact that these are the top US corporations, number of employees. Walmart, 2.1 million. Amazon, 1.5 million. Yes, they may have laid people off at Amazon or whatever, but compared to the 1.5 million that they have, it's very small. You could look at UPS and Home Depot, Target, all these other companies, Starbucks, and so on. These groups have a lot of people. So we need to pay attention to them and understand that they move the needle a lot. So let's keep an eye on the big corporations to see what they are doing. If they start layoffs, whatever, we need to understand that that will have a domino effect. Because if Walmart is laying people off, other retailers might be doing the same thing. Understand? So we pay attention to that. So these are just the companies there for you to understand. Now, you waited till the end of the video. Where are the rich putting their money? Are they investing in Walmart? Are they investing in Amazon? Actually, no. Here's where the world's top 0.001% are putting their money, according to wealth experts. And by the way, Finance Friday, we already talked about this, but now, after the fact, again, I'll put that up here on the YouTube. You could see they're talking about the rich people. They're largely concentrated in New York, the Bay Area, Los Angeles, London, and Beijing. But they don't invest in get-rich-quick things, illiquid things today. Get-rich-quick, they're talking about a few things. What they were saying was a lot of them don't have stocks, or at least a majority of their net worth is not in stocks. What are they buying? What are they investing in? They've got real estate. They've got art. They've got things that, for the most part, people just can't afford. They can't get into. We're talking about people with enormous wealth. I'm not talking about somebody who has $10 million, okay? We're talking about enormous wealth. So real estate, specifically Class A properties, the high-end properties, multifamily real estate, the stuff that is going to be there in 10 years. They're not going to have trouble with their rents, but maybe their return on their investment's not super high. They don't care. They're just trying to preserve their wealth. Make some money, certainly. Beat inflation, certainly, but not have to worry about it. Family offices as investment vehicles, we're talking about that. Alternative assets as well. Alternatives could be a lot of different things. Could be art. It could be, bottles of wine, all that stuff. And as they talk about here, sports teams. Sports teams. So any of these other kind of things, and I'm seeing that come in a lot from the Saudi investment fund is doing a lot of this. They're going out there, they're buying sports teams, they're buying like all these different things. They're doing this kind of alternative investment for different reasons, but that's one example, right? Just a whole bunch of money, just, hey, we're going to throw it here, we're going to throw it there, we're going to try this, we're going to try that. Different scenario. A lot of it is illiquid. Illiquid. You might say, we just heard that we need liquidity. You've always heard you want something to be liquid, but the rich are doing something totally different. Sure, not all the rich people. There's some rich people that are entirely based in stocks. But what we're seeing here, we're talking about people with money, families with money. What are they doing? They're playing a very different game. Interesting, right? All right. I wanted to let you know that all of this stuff in depth, we go into it in the Finance Friday live Zoom class with me, a small group of people where we go for 2 hours. If you can't make the live class, although I do appreciate, the lives, there's a group of people that they just can't make it, different time zones or whatever, so they get the recordings of this. So thank you very much, by the way. Shout outs to the Finance Friday. And if you're like, I need to make money, I don't have, $100 million. Well, what we talk about on the Sunday Business Live is how to make money starting in an online business. That's what this is all about. It's at the beginning stages. If you're completely new to it, that's okay. We talk about it from day one type stuff. I help everybody get off the ground. I want to see you as part of that. There's a link in the description below and you can get that. I hope to see you there. If you found this video informative, hit that thumbs up button. Why, where are you going? Where are you going? You're going to go see Jerome Powell? Hey, don't ask him for your money. It's already been devalued. Helicopter money. That's the way it goes. All right. Hit that thumbs up, and I'll see you tomorrow. Take care.